Welcome to the Flow Tracy Money Audio Commentary. This is Owen Tracy recording. It's 3:28 p.m. that is Central Time. Today is January 15th. And I thought we'd kick off today with the UK's CPI figure, which came in better than expected, but it just went sideways. So we've had a meaningful jump in the inflation rate over the last couple of months, and it's just stopped going up. But the stock market reacted with great enthusiasm, and particularly the bond market finally caught a bid, and yields compressed. Then we move on to the US, and we had a similar number. So again, let's just contrast the performance of these indices. The core CPI figure in the USA was better than expected. It did contract, and certainly a contraction is better than an expansion, but the size of the move was not particularly large, only about 1/10 of 1%, and then it's still above the lows put in August. So what it's looking increasingly likely, I think the scenario is that we're seeing evidence of support building at the upper side of the underlying base formation. Now, it doesn't mean that inflation can't go down from here. It could, but what would need to happen for that to occur? Well, maybe unemployment would have to rise further, or joblessness would have to increase. That could certainly be something. Then maybe inflation just goes away all on its own, because we have more discipline from the politicians, and they don't go off and spend a whole ton of money that they're not taking in taxes. That's also a possibility. But I think we should be a little bit realistic that that seems to be an unlikely potential scenario. And then when we have such enthusiasm from stock markets, bond markets, commodity markets, and crypto markets, we have to at least hold out the possibility that inflation might not be quite dead after all.